Hello everyone, Jesse Webb, TradersPro. Market conditions remain bullish in a bull market. Had a little bit of a pullback yesterday, which is not surprising. We're towards the upper end of this range, and so we certainly could see a pullback. We saw momentum solidly bullish, and we did see breadth tick back a little bit. It was up in this upper range a couple days ago. Sentiment also inside of that range towards the upper end. If we look at, let's look at buy-sell ratio. Buy-sell ratio. Where's my drawing tool? Right here. I saw some support. This halfway point, I'll typically draw this in here because it's a quick way to continue to look at the bias, the overall market bias, at least in the short term. And so we're still in this upper range, but we are closing in. And I'd mentioned the other day, we'd often get kind of that three-part move, and sometimes it looks a little bit different, but so I say 1, 2, possibly 3, or maybe another move higher, and then some support back down again. This is all, for the most part, this is all bear market. And so when we go back, if we take a look at this and go back, let's go a couple years, let's go 3 years and see what that looks like during a bull market. So during this bull market, you can see you get these longer ranges and higher ranges, and bear markets, let's see, what's the date range here where we've got this January of 2022 and about January of 2023, about right here. So most of this entire block inside of this range was the year-long bear market. You can see how high those sell ratios get. This probably was the bottom right there. We had that just at a real extreme capitulation move. We had the widest range between the buys and the sells that we'd had during that entire bear market. Then we had one more bottoming in the spring, but you can see this rally so far is relatively light, but it's definitely in that upper range where we could get some continuation from, but it's definitely not as strong as we were at one point. Where you can see some of these upper ranges here. So we're now in these, kind of approaching that zone. So we're getting a little bit more participation. We just really weren't. This entire last 3, 4, 5 months, 2 or 3 months was really tight right here. So we're getting more participation. We know that through the breadth indicator. We know that through the buy-sell indicator. But in the shorter term, we're sitting at sentiment that's up at this upper range. Now, one of the things too is there is divergence here. It doesn't show it on this chart, but remember that the S&P 500 is hitting highs, new highs in relation to this high. So we're actually getting a lower high and a little bit of divergence, and we're getting in this upper extreme range. So not surprised to see a little bit of a potential pullback here in SPY. And we had a pretty decent bearish engulfing pattern. This engulfing pattern is a down day where it gaps higher and then it sells off all day long, and it covers the bodies. Well, in this case, it covers the body of almost the entire week, but it doesn't cover the body of the prior day. That's a bearish pattern. We're getting a gap higher this morning. We'll see if we get some follow through and retracement, at least back to this support area. I wouldn't be surprised and actually would welcome that. Another little pullback where it'll create an opportunity for a more sustainable bounce going higher. So I'd watch that over the next couple days. You're going to see that on the new buy list as well. Just a lot of kind of sloppy patterns where you get a breakout. Let me go to the new buys where we get this. Let me go to the 6-month time frame. This uptrend, so it moved higher and then it faded back down. So you're getting a topping tail bar right here. Still inside the buy zone, so we want to see some stability and some confirmation in addition to the price pattern. So just because we get a new uptrend signal, they're going to happen every single day. And so we go through and we'll talk about these and look at them. It doesn't necessarily mean you have to take them because market conditions are just what we mentioned. They're at the upper end of the range. Probability is for a little bit of a pullback. Wait for the market to settle in on a retracement as well, and you want a good solid confirmation bar for the most part. And you're seeing seeing most of these. RCL, which was an interesting gap higher. We talked about that. We know that when we're up in that upper extreme range, we want to give it a little bit of time to pull back into the buy zone. First Solar is an interesting pattern here as well because you have this retracement bottoming tail bar twice, well, actually a lot of times, 1, 2, 3, 4 really bottoming support areas where you get this price pattern, it retraces, so it opens, it trades lower, and then you get buyers that come back in and push it right back up again. You get these hammer patterns or these bottoming tail bar patterns, and those are very bullish. So here on this stock, we actually have a retracement here, some support, and a back into the buy zone now. So we're in that range where we can create a risk profile because we want to set a stop loss either at the low of the bar or at the low of the most recent hold signal for those overall patterns. So First Solar, I'd mentioned these solar stocks. They may be coming to life. They've been pretty volatile right here, but they're in the upper end of that range and still within an overall long-term uptrend. And that actually probably the most interesting stock of the day is First Solar right here, at least on some of these patterns. Semiconductors, Intel had a positive report. We'll see if that creates some momentum on some of these semiconductors, but you're seeing that fade on a lot of these bars where, and if I toggle the signal and I go back over to just a traditional candlestick, anytime you see that black bar, it just is a down day in an overall uptrend. So you can see these red days when we're in signal mode on the chart itself, then we just simply can know that was that was a down day, just to visually represent that for you. EXAS, another tight consolidation pattern looking for possible breakout with a bottoming tail bar as well. So those can act, those hammer patterns and these bullish, real strong confirmation bars, those are the most effective bars. And when we get one of those in addition to a buy signal and market conditions, if it's a leading sector or if it's a stock that is working, like right now, oil is starting to move. We're seeing some of those stocks start to move. But if you're starting to get continuation of the sector as well, then that can add to that decision-making process, because there's obviously a lot of stocks. We can't trade them all, but having a process to be able to filter that down. And I've mentioned that in the past where you can take the screener. These are designed to be really broad-based scans. They're pulling in a large group of stocks that have pretty wide rank all the way down into the 20s. It looks like I've got the setting on that. So you've got those. If I want to filter that down, I can just create a new scan inside of TradersPro. There's also the 21 scans. If you go into this screener tab and then the 21 scans, these are also predefined scans that I've set up that work really well, because you don't have to. We know that these are settings that work, and you don't have to then go create your own. So in this case, 50% sales growth, 50% EPS growth. I can click on that one. That's going to pull in that group. That now I know it, and it's all of them obviously. So I could then sort it and wait. What's the highest buy signal of that entire group? It's IE. Let's see what that pattern looks like. So now I know that I'm getting those criteria. I'm getting EPS growth and I'm getting sales growth. So here's your EPS growth. Here's your sales growth here, 195%, 153%. So you know the stock is growing, the company is working. In addition, you get some uptrend. So don't forget to take a look at some of those. You might find some settings that you really like. I like this book value to last as well. It pulls in a lot of stocks, but oftentimes you'll get, the last price in this case, let's just look at this, 374, and the book value on that, which essentially what the book value represents is if the company were to be completely liquidated, if they had to, go through a bankruptcy proceeding and they took all the assets and they sold those assets, the value of just what the company has on the books is worth $8, and the stock price is only worth $3. So which is going to catch up? Okay, is the stock price going to catch up to $8, or is the book value going to drop based on something else? So it's a cool scan to be able to consider that. And in a lot of cases, you'll get a bunch of oil stocks or a bunch of tanker stocks because they have massive asset bases and huge book value, and the stock price may be a little bit off because of that. But it's also it's a nice scan to be able to look at. So here's an example: rig, Transocean. Moving higher, book value 14, stock is at 8. So is it going to continue to move higher? So I really like that book value scan as well. There's penny stock volume spikes, big volume 200% spikes. Nothing on there, or is there? Oh, it's not. It's not pulling anything in. 5% change. Return on equity greater than the year change is also a good one. There's just a lot of them in there that you can go in and tinker with and see which ones are providing value for the kind of stocks that you're looking for. That'll do it for today's update. Everyone have a fantastic day today.